guy from high school?
John.
I'm down. Alright, hey guys, welcome to Stock Trading Club. We're just gonna go ahead and get started today. So, today we're just learning about risk management, right? So, risk management, the name implies that you're managing your risk, right? So, stocks inevitably drop, okay? You don't want to look like that guy on the right side crying over your stocks. With proper risk management, you'll learn to lose less money because eventually you're going to lose money, right? You just have to make sure that the money you lose is less than the money you earn. And that's where risk management comes in, okay? Risk management, we're just learning the very simple stuff. Risk management as a whole, most of it is just math. So today we're just going to learn the very basics, okay? So there's something called the 2% rule, where on a single trade you never want to risk more than 2% of your whole account, right? So let's say your account was 100, right? I don't know if you guys can see this. Let's say your account was $100, right? You want to risk 2% of that at the most, right? So your max loss will be $2, right? And then position size just means how much you're putting into the trade. And then stop loss, we learned how much the stock will drop before you sell it, or the system sells it. So your account was $100. You want to risk no more than 2%, so your max loss is $2, right? Let's say you put $100 into the stock. Your position size is $100, right? Your stop loss, so this is like very basic math, right? You have to just divide 2 by 100, right? Because your max loss is $2. That would give you 2%, right? You put in $100 into it, your max loss is $2. The stock could drop 2% before you have to sell it, right? So same thing, account is still $100. You risk no more than 2%. But let's say this time you only put in 50. You only put in $50 into the stock, right? So your max loss is still $2. This time instead of 100, you're putting in 50, right? So that would be 4%. So if you can see, if you put less into the stock, you can afford to lose more, but still keep the same total loss, right? So the equation for this is your stop loss percentage, which is down here, would equal to your max loss over position size. Okay, in this case, if you're giving your max loss, you're giving your position size, you can calculate your stop loss using the equation, right? Max loss divided by percentage size. However, every single trade is different, right? So let's say a stock moves around a lot. It's really volatile, right? You're gonna want to give the stock room to move around. If you put like a 1% stop loss, the stock moves around a lot of the time it's gonna hit your stop loss. You're not gonna be able to make the trade happen. So if the stock is volatile, you're gonna use a lower stop loss, right? With the lower stop loss, like we saw earlier, you need a smaller position size. The amount of money you put into the stock is going to be less. So in this one, let's say your account was still $100 with a 2% risk, right? Your max loss is still $2 for two scenarios. But this time, instead of trying to calculate your stop loss, you're trying to calculate your position size. Because you're like, oh, I need, say for example, I need, let's say for this trade, I needed a 5% stop loss, right? You're like, the stock needs to move around 5%. Any less than that, it's just gonna sell for me. Probably won't work, right? So you would set this equation to find the position size. You would rearrange the equation we saw last time as your max loss equals position size times your stop loss percentage. Your max loss is your position size. POS just stands for position. I abbreviated size. So with that equation, right, we can calculate your max loss is $2 equals position size is X, right? Times stop loss percentage, 0.05. 5% is a decimal, right? So with that calculation, you could calculate with a 5% stop loss, you could put in $40 into the stock. Versus, let's say you had a stop loss of 7.5%, right? You want the stock to move around a little bit more before it sells. Same thing, right? Oh, I missed a 2 here. So this time $2 equals 0.075x, right? X is your position size. You would guess something like X is 26.67, right? So if your stop loss is greater, you're always going to use a smaller position size. This is so that with a smaller position size, the stock can drop more and you will still lose the same amount. Lastly, we're going to try out an example, but instead of setting the stop loss percentage, we're going to use a stop loss dollar amount. So let's say your account in this case was 75,000. Your max risk was 1%. Okay. So 1% of 75,000. Oh wait. Yeah, 1%. Okay. I'm gonna make this 10%. 10% of 75,000, 7,500, right? In this case, let's say your max loss was 10%, right? Could anyone tell me anything wrong with your max loss being 10%?
It's over the 2%.
Yes, exactly. It's over the 2% rule. Remember, in the first slide, we went over that your risk cannot be more than 2% on every trade. You have to follow this rule, otherwise, statistics have shown that before you're profitable, you end up losing all of your money. Or even profitable traders, sometimes they risk 50%, 60% on one trade. They blow their account in 2 trades. So you always want to follow the 2% rule. So let's say you bought a stock at $43.5, right? And then your stop loss on this stock was $43. So in between, you have a 50-cent stop loss, right? If you bought at 43.5, your stop loss at 43. In between, you can lose 50 cents per share. So your stop loss amount will be, say, 50 cents, right? 50 cents. So in this case, the equation would just be position size equals max risk dollar amount, max risk abbreviated as R, over the stop loss amount in dollars. Okay, so what this means, right? This is the total amount you can lose. This value on top is the total amount you can lose. The value on the bottom is the total amount you lose per share, right? So if you divide these two, you end up getting how many shares you can buy. In this case, would be, oh, my bad. This is not percent, this is dollar amount, okay? So in this case, you could buy 15,000 shares, okay? If you can afford to lose $7,500 total, with each share losing 50 cents, then you can afford to buy 15,000 shares, right? In this case, you're risking 10% of your account. This is not an ideal situation. Probably with like 5 trades, you blow your whole account. So, does anyone have any questions regarding the basics of risk management? No? Okay. So, that's kind of just it for our lesson today. It's pretty short. Pretty much you just use one equation, you rearrange it around, use some logic, you can calculate your risk, right? So there's something our club is doing on December 8th. We're hosting a stock analysis competition, okay? Where you want to analyze a stock all right, not the company. So tell me about the stock. Don't tell me about what products Apple makes. You should tell me about the chart of their stock, their financials, right? You can use fundamental analysis or technical analysis, whichever one you prefer. And you could do it as an individual or a group, right? If you want to do a group, you could get a group of up to 4. So what are we looking for? We're looking for 3 things when we grade this, okay? The analysis is how detailed you can make the examination of the stock and how accurate it is. The prediction is like, what do you think the stock will do in the future? And execution, now that you predicted what the stock will do in the future, how would you profit off of this move? So those are the 3 steps we're looking for. So we'll talk about prizes, right? The overall winner, if it's a group or an individual, you're gonna get a large pizza and a gift card. And then kind of the second place, where you have the best analysis, but you kind of missed the other steps, you would get a box of donuts, okay? And then prizes will also be awarded for participation and credit. And the competition will take place December 8th, but we're gonna release the stock for you guys to know on December 1st. That's the week after Thanksgiving. Does anyone have any questions? Okay, great. That concludes our meeting for today. If you guys didn't sign in, please come see me up here.